All right, so now here we are in disc 5. Basically all we're going to do now is just go over various real trade examples that I made, since back all the way down to, I think we have examples all the way back to 2006, trading this same strategy, with the FUS4 patterns. Just another reminder of what we're looking for is basically three-phase breakout patterns. So the first phase is the volume plus price. So we get that increase in volume plus an increase in price action. So we get a strong and steady rise in price with an increase in volume. In phase two, the consolidation is formed, where we actually form the neckline, where we can draw the horizontal neckline and connect the resistance points, as well as connect the ascending trend line here as we get higher lows going into the nose of the triangle. And then finally in phase three, we get that actual breakout, and we will get the on the day of the breakout, we want to see increase in volume. That's a excuse me, an indication of a lot of new buyers coming in, and this will also spark some momentum going forward. And then once the stock breaks out, basically what we're going to do is ride the 13 EMA trend and or sell into spikes near resistance levels such as the whole number resistance levels or actual physical resistance levels. Okay, so now I'm just kind of going to jog your memory on the FUS4 patterns. So starting out, we have the FUS force pattern. Basically, the lead-in trend, is going to be either neutral or bullish leading into the actual breakout. So it's usually, either a short term, it can be short term, or a much longer term. It might be, up peaks in price around here, and then also a shorter term three-phase breakout formation here. So we have a longer term breakout. And then once this breaks out of the shorter term three-phase breakout formation, whether it's long term or short term, that's a pretty big indication of a strong move forward, as the stock's already bullish. There's positive sentiment around the stock, being that the lead-in trend is pretty bullish or neutral. Next up was the FUS survival pattern. Basically, here we have, you're going to have a huge run in price action where it peaks out and then has a lot of profit taking. But instead of just completely collapsing and selling off and not really do anything, if it eventually finds support and forms a three-phase triangle breakout formation, in which the breakout buy signal is if and when the neckline is actually broken. So you want to buy into this survival pattern when it breaks out above here, and then from there, your first profit target is going to be that past peak resistance. But sometimes, this stock will ride up to here, maybe shortly consolidate for a second, and then just explode past this past peak resistance. So stocks, can and do sometimes explode past here and keep running after you buy in here, and that sometimes is a second buy signal as it breaks out above this resistance point. Next up is the FUS revival. The lead-in trend is bearish, so the stock is, it's got pretty negative sentiment about it. There's a reason why this stock has been selling off, and and it's at a low point. But what goes down, eventually does sometimes come up, and indication of that is when it forms kind of a bottom, and then you see a three-phase triangle formation formed, giving you a neckline resistance area, forming a buy signal for you to buy into. This works because the stock is pretty beaten down in price. Some bargain shoppers might be hopping in here, as well as people who might be short this stock will see that this stock is breaking out on volume, and they might be influenced to cover their short positions, which also creates a lot of buying pressure, which can enable this stock to make a very short-term squeeze and move higher. Last but not least is the FUS gold pattern. Remember, we were just talking about it's a longer 9 months to 2 years, trading under $1 per share. Where the stock price is coming back up and retesting at or around $1 per share resistance, and then leading into the actual breakout. It's usually a three-phase triangle formation, with volume coming in, and then a consolidation in phase two, and then a breakout here above the actual neckline. The indication of this sometimes means that we will see a very short-term, big 100% gain all the way up to $2 per share. But you have to be very diligent about trading gold patterns. I hardly ever, if have ever, I don't think, have bought at 1 and sold at 2. I'm not patient enough. I usually want to take my gains at 20 to 50% is usually, when I get too impatient and just decide this is enough. I need to lock in my profit before this disappears. Because as soon as it goes up to 2, it's just as fast as it rose. It can and does fall back down to 1, and potentially even lower from there. So you need to take your profits on these gold patterns and be very, very diligent. All right, so moving forward, we're going to start looking at some actual trade examples from about 2011 in January, all the way back to, I think I have some from 2006 when I started my website. So let's get started here. As you can see here, this is a Foos force pattern. You see here the lead-in trend is kind of neutral. Then we got this large spike in price and this trend pattern here. And then we had this consolidation. This isn't really a very solid triangle formation. It's kind of more of a channel, but we do have that neckline breakout buy point. So looking at here, I wanted to buy in. The buy signal was right around here. I got in late, but I loved this pattern. I loved the volume coming in, so I actually did a pretty strong position. I either did a 2/3 or a full position on this trade and longed it at 371. So setting up your trading plan for this stock, your first profit target would have been about $4 per share, and then up about $5 per share, depending on how high you thought this stock could go. From here, a good place to buy a stock on a dip here would probably be about the midpoint of the breakout candle. As this stock had made a significant move off the neckline support, so buying in here at 385. If that's what you did at the top, you probably wouldn't want to do a full position there. You'd want to give yourself an opportunity to buy on a dip, or even stop out if the stock starts breaking down below, like the 360 area, which is also the midpoint of the breakout candle. So stocks that make big moves like this and are really high up above the actual breakout point, this is where you kind of want to be more aggressive and maybe put a stop around the midpoint of the breakout candle, rather than holding a stock all the way, buying it up here, and then letting it fall all the way back down and lose all this gain and have it break down below this neckline support level. So moving forward, as you can see here, the day after the breakout, the stock kind of halted out up at the next whole number of resistance at $4, forming kind of a bearish shooting star candle. So you could have sold at $4 and that would have been a solid gain. Or you could have held onto the stock, see what kind of more juice it has left in it. As you can see here, it pulled back actually right around the midpoint of the breakout candle, as I have been saying in the previous DVDs, that that's a great area of support on really strong stocks. So that would have been a great buying opportunity to buy in on a dip on the stock near the midpoint of the breakout candle. It actually never retested the 13 EMA support up until about $4 per share. But as you can see, we got that huge breakout and went long at 371. It gave you a short-term buying opportunity to buy on the dip near the breakout midpoint, and then absolutely just blew up again past 4. And I took advantage of this multi-day gain here, and I locked in my profit at $4.67 for a 25.88% gain. From there it came down to retest of the 13 EMA trend. As I said, the 13 EMA is not perfect. Sometimes it will break down and shortly rise afterwards. It's kind of a range around the support level. And sometimes you want to wait for an actual confirmed close below the 13 EMA before selling, rather than panicking if you were holding the trend here and this broke down and then actually rose all the way up to $5 per share, a whole another dollar per share from 4 to 5 in a very short amount of time. But what I like to do is, basically my whole strategy is just buy into a breakout, take advantage of the strength. If there's no strength, I sell on a breakdown of the 13 EMA. Is basically my strategy, and that's exactly what I did here. I bought in to the breakout, held it for about a week, sold it for a 25.88% gain. Next up is ANO. This is a Foos revival pattern. As you can see here, the lead-in trend is bearish. So the stock's pretty beaten down. It drops below $1 per share, but then it kind of bases out here. And we started getting an increase in volume. As you can see, there's some more buying pressure coming in as the stock starts stabilizing. And then we got this short-term revival or three-phase breakout formation formed here. And as I said before, $1 per share is a huge reaction point for both support and resistance in the stock market. So as this broke out above this neckline resistance and about $1 per share on this huge volume, that was a pretty big indication of a buying opportunity. And I went long at what, $1.02. From there, your profit target is going to be around this past peak resistance level, about 125 area. As you can see, the price was peaking out in these levels. Saying $2 per share is the next resistance. That's not what I'm looking for. That's going from 1 to 2. That's the gold pattern. A revival pattern on this short-term scale. I'm looking from 1 to 25, 125. That's a 25% gain. So that's more feasible and reasonable for what kind of profit target you should be looking for on a shorter term breakout revival pattern like this. So from there you'd probably want to put your stop. If it broke down this neckline support level, that's probably where I would be stopping out if and when the stock broke down there. But moving forward, as you can see here, the day following the breakout, it kind of dipped back down near the midpoint of the breakout candle before absolutely just blowing up. And I took my profit at 122, right around this past peak resistance level for 18.62% gain. From there, it kind of consolidated at this past resistance. Never really retested the 13 EMA, but blew up from there all the way up to about in the 150s. And finally broke down the 13 EMA trend here, and then it was just kind of choppy. So this, screw all this price action. I don't care about trying to hold the stock through all that. I just want to be in, buy, take advantage of strength into resistance areas where I want to take my profits, and that's exactly what I did. Otherwise, I probably would have got stopped out if it broke down below this breakout resistance point here. And then once the 13 EMA moves above the actual neckline breakout, that's when I start riding the 13 EMA trend as a potential stop loss area. All right, so up next is CHTP. This was a Foos force pattern on the longer term scale, but looking here, this was actually a short term, kind of a uglier revival pattern. But that's what what happened here. We got that lead-in trend. Kind of a neckline formed here, but there's also this past spike up here. Then it actually broke out above it, and then had this big run when it broke out from here to here. And then actually in this little small section, this is another mini survival pattern. So as the survival pattern goes, you get that big rise in price action, followed by some profit taking, but then there's actually a short-term consolidation. So when this broke out above this kind of symmetrical triangle formation, at about 425, that was your first buy signal to go long, with a longer term breakout potential on a push above 450 of this force pattern. So as you can see here, I went long at 449, buying into this stock right as it was breaking out. So from there, it moved all the way up to 506 in the close, but actually all the way up to 575, following the breakout. So, into the close here, after I bought in, I probably want to set a stop on a move below this 450 area. That's where I went long. If it came all the way back down, I would lose that loss. But this breakout has some pretty good indications, so I would give it some some time to possibly consolidate if that's what it was going to do. Being that I bought right in at the actual breakout point. Then from there, possibly use the 13 EMA once it rose above 450 as a trend following indicator and trend stop loss. So looking over next, I actually sold half my position. So this is an example of using half positions as your exit. I took advantage of that huge rise in price action and sold at 564 for 25.61% on half my position. Because I bought in at 449, then this just blew up all the way up to about 575 the same day, so I took advantage of the strength. As I always say, you want to take advantage of the strength that you get and just get out while you can, lock your profit. And then the next following session, the stock actually opened up at $7 per share, so that's that whole number resistance theory working here again. So pre-market and after hours, it peaked out at 7, and then as soon as the stock opened up, it started selling off from there. I actually sold my second half position at 679 for 51.22%. So this was an excellent example of buying into a breakout and using half positions to exit out of your position, because you never know how you want to lock in some of your profit, but you also want to speculate that maybe this stock is going to push higher, and that's exactly what this stock did. I played it safe, locked in, a huge 25.61% gain. Then the next day, I locked in the second half for another, 51.22%. So that was a huge trade on this, in 2 days on CHTP. And then moving forward, we can actually see that this formed another survival pattern. So as you can see here, for the survival, we got the huge run in price, followed by some profit taking, but then a three-phase breakout formation formed, which actually broke out about 550 here and just absolutely exploded up to $8 per share and got this other gap. I actually didn't buy into this one, unfortunately, but I did throw it in on the watch list and noted it to all my members at my website of this potential trade. So moving on to the next trade is CPWM. As you can see back here, this was actually a great looking revival pattern. We got the leading trend bearish, followed by the rise in price plus volume. Phase 2 consolidation, then breaking out on volume, and this went from about 150 to $3 per share, in about a week. So that was a huge move. I actually didn't play that formation. I actually played this formation up here, which is a force pattern. So as you can see here, we got this short-term kind of a three-phase breakout formation right here in this smaller section, but also resistance was formed back here as well. So breaking out above this long-term resistance level, and especially above whole number resistance at 6, as a pretty big indication of a strong breakout. And we also have this big price rise in volume here, and all as well as here, indicating something was kind of coming up here on this stock. So I went long at 5.99 as this was breaking out on heavy volume on this session, and actually just blew up all the way up to the next whole number resistance at $7 per share, even higher at it, closing at 7.24. So on a stock like this, this is when a stock has a huge move above the breakout point. This is when you'd want to be a little bit more aggressive with your stop loss levels, being that you wouldn't want to be buying a stock right here and then have it rise all the way up here and then have it fall all the way back down to the breakout point for your stop loss level. So this is where an area where you'd want to, or a kind of a trade where you'd want to use the midpoint of the breakout candle as your potential stop loss level. So sitting right around 650 or maybe a little bit below 650 would be an area where you'd want to either buy on a dip if you were stupid enough to buy it all the way up here at 7. I certainly wouldn't. But a dip buying opportunity would be around 650 per share, as this was actually just the first day of the breakout. So there is a pretty big indication that there's plenty of upside room ahead. Every trade that breaks out of a FUS4 pattern, the first day is just day one. What these patterns, when they do work out, it can run along the 13 EMA for a couple weeks to a couple months and see some huge gains, following the first day. But buying in on a dip here around the midpoint of 650 would have been a safe trade, with a tight stop. If it ended up breaking down, you'd maybe want to sell as well if it started breaking down below the midpoint of this breakout candle. But moving forward, we can see here that no dip even ever happened. That's what I was saying. Sometimes if you weren't able to buy a full position down here, but you were going to buy up here around 650, you'd maybe want to bet a half or a 2/3 position, because this was a very strong looking FUS force pattern, and sometimes these stocks never dip and just keep rising forward. And that's exactly what happened here. It went from, $5.99 all the way up to $8 per share before even kind of making any, halt in price action. So some of the strongest breakout patterns usually won't even dip before making before going up, so that's why I was saying, using half positions, at least buying into the stock. You might have bought in a little late, but having a smaller position in the stock, as it might just be, can keep blowing up. Then if it dips, you can add to your position, making it a full position. But in this case, the stock never gave you a chance to buy on a dip. So I bought it in a full position at 5.99, and I just took advantage of these two huge days of movement. It sold at 7.50 for a 25.21% gain. From there, it formed a bullish flag pattern that we were talking about earlier. Broke out of that at $8 per share, and just rose all the way up to 12. And then finally broke down the 13 EMA at 10.91. So, if you were patient, you could have maybe sold half up here and then, rode the 13 EMA trend on this just to see how high the stock could actually go. And you could have made a huge gain, maybe selling into one of these spikes up here into the $11 or $12 area, or you would have got stopped out at here at the 13 EMA trend. But, I sold here. I took advantage of my 2-day gain. I don't kick myself whatsoever for not holding through this period here. My strategy is to buy into a breakout, sell into strength for short-term gains. Otherwise, I get stopped out on a breakdown below the 13 EMA. That's basically how I trade. So I was very pleased with this trade with my 25%. Up next here, we got another force pattern. As you can see here, this was breaking out to all-time highs here. As I said before, there's no physical resistance. This was actually a recent Chinese IPO that IPO'd here, came back down. This is actually kind of an ugly looking revival pattern. This isn't something I probably would have bought into, but it actually did make some huge moves up there, and then actually kind of formed this little survival pattern is here as well, but actually was pretty darn sketch. With this price action up and down. This was a lower liquid stock. There's not much volume here, but once it broke out above this force pattern, above 4 to all-time highs, now we have zero resistance ahead. This is where you want to start using hold numbers again as your potential profit target. As always, hold numbers are always going to be a good idea, but looking here with no resistance ahead, hold numbers are probably your best bet because there's no physical resistance in the past to look at. But I bought into this stock. I believe this reported strong earnings, which is why we were buying in here. We went long at 396, and so it reported strong earnings, and then the indication of this breaking out above $4 per share, to all-time highs, on increased volume. This is a pretty big breakout that I wanted to be a part of. So this is a force pattern. So going long at 396, closed up at 430. If it started breaking back down below this resistance or now support level neckline, that's where we would either want to be considering to buy on a dip or potentially, stop out of a position if it continued to break down below the support line, because that would be indicating a false breakout. So going forward, you can see here the stock soon after the breakout, it kind of had a short-term consolidation here where profits were taken, but price came all the way back down to the actual breakout support line, barely dipped below it, and then kind of caught up with the 13 EMA right here. So this is kind of a double strong support area where the 13 EMA was there as well as the neckline support was there. So, it's dropped slightly below it, and, stock market's not perfect. So, it's never going to be, pinpoint numbers. But there was that strong buying opportunity on this dip, and I was continued to hold. And then from there, when it dipped back down slightly below 4, it just skyrocketed, from there all the way up to $5 per share, the next whole number resistance level. I took advantage of the strength on this day when it broke out above 5 and sold at 534, locked in my 34.85% gain, moved on. I didn't do trend following or anything, most times, if I got a big 34.85% gain, I'm not going to be greedy. I'll take it and I'll move on. I'm not going to, I could have trend followed here, maybe sold half up here and then rode the 13 EMA with the second half, and I would have got stopped out here. Sometimes it works, sometimes it doesn't. But I'm typically not a very super greedy person. I like to take my profits. I had a 34.85% gain. I peaked out at at about $5 per share whole number resistance. So that was a great profit target area to lock in your gains. Next up is UEC. This was a Foos force pattern. So as you can see here, we got the shorter term three-phase triangle breakout formation. In addition, there was longer term resistance at $4 per share. So this is actually kind of a channel pattern, but with a longer term breakout above the $4 area. Excuse me, yawning. But you can see the lead in trend here was kind of neutral, and then it was bullish. So we got this kind of positive strength here, and then this kind of a neutral channel trend here. And then as soon as it breaks out to a new high above this on increased volume, so you can see here we got this increase in volume is it leading into the actual breakout. So I went long at 434 as this was breaking out to new 2-year highs pretty much. And uranium was pretty hot at the time. This is a uranium company, and this stock had a pretty good FFE or future fair value that made it look at a really attractive from both fundamental and technical aspects. So moving forward, you can see here buying into this breakout at 434. You'd probably want to set your stop loss on a move below the neckline or about the midpoint of the breakout candle here, or the 13 EMA once it starts moving above the breakout candle. But here, following the breakout, the stock, had that short-term kind of bearish shooting star candle. But the first couple days following the breakout, that's usually when there's going to be some kind of consolidation or an opportunity to buy on the dip. A lot of people in the chat room, I'll buy stock on this day, and then it'll do something like this, and just have this kind of weird looking shooting star candle, and they'll be freaking out like, oh my god, what do we do? Is this stock going to crash? Or you just got to just cool out. Just wait for the stock to play out. See how the stock's going to play and hold up against the 13 EMA trend. As long as the stock holds up above the 13 EMA following a breakout, the stock is pretty bullish. So here, the second or the third day, the stock came back down and dipped pretty much exactly to the midpoint of the breakout candle, as well as right near the 13 EMA. So that was a perfect dip buying opportunity on this position if you were looking to buy on a dip, or get into the stock for the first time if you didn't catch it on this first day of the breakout. From there, first profit target would be around $5 per share. Next hold number resistance. Next up at 6. Hold number resistance. But we got this huge single day gain. As I said before, if you can catch a huge single day or a multi-day rally, take advantage of it and lock in your profit. And that's exactly what I did here. I sold the stock at 555 from 434 for a 27.88% gain. From there you could have rode the 13 EMA. It dropped slightly below it on this day. As I said, nothing is perfect in the stock market. The 13 EMA is going to more find support kind of in a range at or around the actual 13 EMA. So this bounced off of 13 EMA, then actually rose all the way up to about $7.50 before finally breaking it down officially up here. But I took advantage of my short-term profit, locked in 27.88%. Bam, thank you, ma'am. Let's move on to the next trade. Here's a VRNM. This is a Foos revival pattern. As you can see here, the lead-in trend is bearish. Kind of got this weird spike in price action where it gapped up and then took a big tumble afterwards. But after that, it formed another three-phase triangle formation. This can almost be considered a survival pattern in the sense that your first profit target would be this peak up here around 460 where it peaked out up here, as well as peaked out up here. But breaking out above here would be another indication of a strong move forward. So I actually bought into this breakout at 374 as it was breaking out. From there, I'd want to put my stop loss, if it started breaking down below this neckline resistance level. But moving forward, I actually took my profit on this same day as I bought in on the same day as the breakout. And then moving into the close, it had this huge run and pushed all the way back up to this past resistance level. So I took advantage of that short-term intraday spike on that single day, locked in half my profit at 459 for a 22.73% gain. And then I actually was going to trend follow the second half and then see how it could go and maybe break out above here. But following this breakout candle, may have been a good idea to sell on a breakdown below the midpoint of the breakout candle, because as it closed below the midpoint, sorry, as it closed below the midpoint of this breakout candle, about $4 per share. As I said before, that would be an indication of a short-term, reversal. And when that forms this candle that closes below the midpoint, that's also a bearish cloud cover candle formation. So it's a bearish signal. So this was a bearish candle on this day when it closed below the midpoint of the breakout. I still was holding. I was going to ride the 13 EMA, but actually got stopped down here for about break even on this position, or for my second half position. So I locked in half up here for 22.73% at this past peak resistance, and then locked in the other half, stopped out here as it broke down the 13 EMA for about break even. Okay, so up here we got a great looking Foos revival pattern on zinc. We see here we got the lead in trend is bearish, moving down here, then followed by a great looking a three-phase breakout formation pattern. As you can see here, that whole number resistance coming into play at $9 per share right here. This kept peaking up at $9 per share, but failing to break out. So once it actually did break out above that resistance level, it got that nice little spike in volume. This is a pretty good indication going forward that we're going to see a rally coming in here. So first off, our profit target is going to be next whole number about $10 or up about $11 per share. And your stop loss level is probably going to be if this stock breaks down below this neckline, you're probably going to want to get out of this position, as it might just be breaking back down and fall back down to $8 per share support around here. But going forward, you can see here this stock never actually really dipped, and actually eventually went up to $13 per share. I took a short-term gain of 7%. The stock rallied up here, and kind of just halted out around $10 per share, forming actually a pennant formation that broke out again, which signaled another possible buy signal, which actually rose right up to 11, the next whole number resistance level. But you could have bought in here and rode the 13 EMA trend. It bounced off the 13 EMA right here and rallied up to 11. That would have been more of a better trade to make, if you were following like the legit plan of, riding the 13 EMA trend up until a decent profit level, But I took my short-term 7% gain, $10 per share. I actually got out at 976, so I was pretty impatient with this trade. But as you can see, this is what kind of reactions you get off of these Foos patterns. If you trade them correctly, you can either make 7% or you could be a little bit more patient, and you could have rode it up to $11 per share. Riding the 13 EMA as a trending stop, you may have gotten stopped out here on these days when it was breaking down during the session, but actually was closing back up above it. As I said, the 13 EMA is not ever going to be a perfect indicator. A stock may just be bounce off the 13 EMA, but never fall completely below it. It might just trade in a range at or around the 13 EMA, and actually hold up the trend and keep moving forward. And that's what happened on this trade here. The 13 EMA trend did pretty much hold up while breaking it down a couple times here, but actually never closed below the 13 EMA, and then rose all the way up to $13 per share from my original $9 buy signal price. So that's about 30-40% gain right there. Up next is ARNA. This is a small cap biotech stock. This is a Foos revival pattern, but what my initial buy into was, it's kind of a short-term survival pattern. So you see here we got this big gap up on a nice spike in volume. Then there was that profit taking where the price came down back towards the 13 EMA a little bit, and then consolidated, but kind of formed this neckline resistance right around here. It was about $1.60 or $1.59 or so, I think, was the actual breakout signal buy price. So once it started breaking out above this on this spike in volume, I actually went long at 163, on this short-term survival pattern, but also I was looking at this longer-term revival pattern play. So, our profit target here is going to be up near the next whole number resistance level, which is about $2 per share, which is the next whole number resistance, as well as physical resistance, which was the past peak levels over here, around $2. So, you probably want to put your stop level on a move below if the price couldn't hold up above this actual neckline support level, it might be an indication that the stock might not be ready to break out yet. But the stock would still be in play once it broke out above this neckline resistance level for the longer term revival pattern. So looking forward, following the session, there was never a chance to really buy on a dip. It actually gapped up above the revival pattern breakout point, and from there rallied all the way into the close, closing up near the high of the day at about the mid about 220s area, right above the whole number resistance, as well as closing right around the past peak resistance back here. So, I took advantage of this short-term huge day move. As I always say, huge days like this, you want to take advantage of some, if not all, your profits. So I locked in, nearly 30% gain on this trade in just one session. As you can see, right after I sold, after big days like this, it's very typical of a stock to see some big profit taking, and that's exactly what happened here. This pretty much in the next 3 days after this huge breakout, your whole gains you would have had from this one day were gone in 3 days. So you have to take advantage of your profits that while you have them on days when you capitalize on a huge day like this. This stock blew up, I think, like 30 some percent on this session. So you have to take your profits, set profit targets and stick to it. Take your profits, move on to the next trade. That's how you're going to succeed and continually move forward in the market. Next up is CHGS. This is kind of a survival slash revival play. Looking here, we kind of got this big rise in price, followed by a decent amount of profit taking. So this is kind of a sketchy little survival, almost a mini revival here, and also a longer term revival pattern here with the lead-in trend bearish, followed by this spike, resistance level here, and then another breakout above this resistance level could be considered, a longer term revival pattern. But looking forward at, or looking at our current position here, I bought in on this day, this breakout above this past peak resistance, and also pushing above 2. I bought in at 191, and we also had this huge volume here. So you always want to be looking to see if the stock has big volume coming in. And our next profit target would be right around 260 level at the past peak resistance levels. And if it breaks out above here, this could move forward, up to $3 per share. But you're actually going to be pretty surprised at what happens next. Actually, screw this trade up. I didn't necessarily screw it up. I made an awesome trade. I made, about $4,000 or $5,000 on this stock, on this trade that we're going to look over next. So let's see what happened after this stock broke out of a foos pattern. As you can see here, this day after I bought it, it broke out above this past peak resistance level, indicating another possible breakout and a move higher. And then after it did that, this thing just absolutely exploded and gapped up to open around 4 and moved all the way up near 650 per share. So this was a huge, crazy day for this stock. It rose up over 100% in a single session, and up almost 250% or so from where I originally bought it at 191. I actually sold it with an average sell price of 260. I locked in half my profit on this day. Then I was going to hold the rest, thinking that it could possibly keep blowing up. I took my first half profit at this past peak resistance level. And then during the session, it actually started breaking down below this breakout point of 250. And so I sold it, my second half during the session before the close, as it was breaking down below 250. I was like, oh man, this looks like it might be, peaking out up here. I'm just going to take this 36% gain and move on, but it actually rallied into the close again and had a strong close above 250. I didn't buy back into this stock, and then from there, I missed out on this huge move up to 650 that I could and made a crap ton of money on. So while that was a bummer that I missed that trade, for the longer term, bigger profits, I did make a huge 36.46 gain in just 2 sessions. So that was an awesome trade that I made there. Unfortunately, I didn't make the get the full extent of the trade. You're never going to get the bulk of every move. You take what you get and move on. Up next, we got another Foos Gold pattern. As you can see here, the longer term trend, is pretty bullish here. As you can see, we've been rising up from about 2009 to 2010, all the way into the end of 2010 here, pushing into 2011. It's bullish in a sense that we've been making higher lows, but it's also kind of neutral here. So we actually got a pretty large three-phase triangle breakout formation, over the scale of about 2 years. So a breakout to new highs above this pattern would be a pretty big indication of a strong move forward. And that's exactly what happened here. When it broke out above this neckline resistance point, it started to break out above. Volume was coming in. I went long at 193. And a breakout above $2 whole number resistance would be a pretty big indication that this stock would be breaking out and be seeing a huge move forward. As you see here, at the actual high of this whole neckline here was at $2, but then you could draw this line connecting these high points here, so you could get a more clear breakout indication here, and that's why we entered at 193. So moving forward, this stock broke out and closed all the way up at 259 here. So setting up a trading plan for this stock, it'd probably be more wise to put a stop, around the midpoint of the breakout candle, and additionally, that would also be a place where you'd possibly be wanting to buy on a dip. Buying into a stock or holding it up from while it's at 259. You wouldn't want to let the stock drop all the way back down to 193 and then stop out of it down here. That would just be stupid. You'd want to lock in at least some of your gains. So a stock that has made a huge move like this above the actual breakout point, this is when you'd want to be a little bit more aggressive with your stop loss and use, about the around the midpoint of the breakout candle. So right around here, around 220 to 230 would probably be a good spot where you'd want to set your initial stop loss on this stock. So at least you'd lock in some gains on this position rather than letting it drop all the way back down when you're sitting on a pretty hefty position. This stock rose 40.76% in one session. So moving forward here, where our profit target would probably be around. You might maybe even take some profits at 259. The stock rose 40%. That's a huge gain. But next whole number of resistance that we'd be looking at is around $3 per share for potential profits. In a general range around that area. So looking forward. That's exactly what happened the following session. It actually rose up to $3 per share and then came back down. And this was actually kind of a doji star candle, as we were talking about earlier. Look for signs of these as potential reversal patterns, after large moves. I actually sold at 272 for 40.57% gain on this trade, in 2 days. I locked in my profit. I moved on. I have no complaints with that. Looking forward, the stock, halted out near 3, came back down, retested support kind of near the 13 EMA, and then rose all the way up to about 420, where it formed another shooting star bearish candle as it failed to break out above 4, and then actually broke down the 13 EMA around here in the 360s. So, you could have held this along the 13 EMA all the way up to 363 just from buying in here. With a trailing stop along the 13 EMA. So if you got extreme patience, you can make some big gains. You just have to have a lot more patience on your hand and time. I don't have very good patience. If I buy into a stock and all of a sudden I'm up 40% in 2 days, I'll take advantage of that and lock in my profit and move on to the next trade. Up here, this is MCZ Mad Cats Interactive. What we're looking at here is a weekly chart. So this is a much longer term scale. As you can see, this is 08 to 09, 09 to 010, all the way into about almost 2011. So this is a 4-year chart. So each one of these candles is actually 1 week of price action rather than 1 day. So this is a very bullish Foos revival pattern on a very long-term scale, which the longer-term scale the chart pattern is formed over, it indicates potentially a larger move once a breakout occurs. And also, this was another great example of playing off of earnings. That's exactly why we got this spike in price action and volume here, was because the company reported record earnings. I wasn't trying to predict the stock prior to earnings and say, hey, let's buy MCZ. I have a feeling they're going to report good earnings. Let's buy prior to that. Like, no, that's not how you want to trade earnings or anything. The way, as I said in the prior DVDs, the way to trade earnings is wait for earnings to come out and play off the positive sentiment. If the stock was breaking out of a foos pattern, while after it reported earnings that were strong, that's when you can buy into a stock, and that's exactly what I did here with MCZ. So I went long at 60 cents per share with a profit target of about 80 cents to a dollar. So as you can see here, this past peak resistance levels was around 80 cents back here, as well as that essential $1 whole number resistance, which is very significant in the market. So moving forward, as you can see here, I bought a 2/3 position to start out on this position on this trade. I actually didn't buy in on the day of the breakout. I bought in on a dip when this stock on the second day, as you can see here, it spiked up and then kind of came back down and sold off down to the midpoint of the breakout candle right here, and I eventually went long about a 2/3 position here at 60 cents for my core position, and I was looking to potentially add later. So after this breakout, the stock consolidated in one of those pennant formations that we had talked about earlier, and a breakout of the pennant formation is a typical sign of a possible move forward. So when it broke out above this pennant right here, I longed an additional amount of shares here, as this was indicating that we could be moving towards my profit target of 80 cents to a dollar. And as well, you can see that this perfectly bounced off the 13 EMA. So buying on the first dip here on a pullback to the 13 EMA would have been a great buy, because it dipped to the 13 EMA. As soon as it did that, it bounced and broke out of this pennant formation. Moving forward, then from this pennant formation, it moved up to that first profit target that I had of 80 cents, where it actually halted out. I still had pretty big confidence in this trade, and I wanted to be holding this along the 13 EMA. I was trend following at this point. So as you can see here, it fell back down, kind of halted out around the 13 EMA. Never touched it, but it did bounce right around the 13 EMA. Then from there, it broke out. It was breaking out to new highs again, and I added more shares on this breakout. Very small amount, nothing comparable to my core position at 60 cents, but just adding a small position because this breakout is indicating a further move higher. After that, I actually eventually just sold out of all my shares at 90 cents. I had a 50% gain on my core position. I was up about $7,000 on this trade. I was satisfied with my profits. It eventually rose up to about $1.30 and actually broke down the 13 EMA here and broke one. But you can't get greedy with your trades. Take the profits while you still have them, and continue moving forward. And that's exactly what I did. Made about 50% of my core position, plus made decent money on these second ads here on smaller positions, and made about roughly $7,000 on this trade. As you can see here, perfect example of 13 EMA breaking down and then the trend reversing, going from about $1.10 on the day that it broke down to a low of near 70 cents in just 2 days after it broke down the 13 EMA. Next up is another, this is a longer term revival pattern, but in addition to a revival pattern, this is also a gold pattern. Remember, the gold pattern is a stock that has been trading under $1 per share, and bouncing off the $1 area for about 9 months to 2 years. In this case, this stock has been doing it for a little over a year, bouncing off the $1 level. In addition, it's forming this beautiful looking three-phase long-term triangle breakout formation on the longer-term scale, which is also in the formation of a foos revival pattern on the longer-term scale. So looking here at this trade, we got this nice big spikes in volume leading into the actual breakout. So that was kind of a good indication, if you're looking at this trade and you notice this chart on a longer-term scale. Even just looking at these, looking at the stock while it was in these areas, you might have been thinking, man, this is something's up with this stock with all this volume coming in. And then if we broke out above these past resistance levels around $1 per share, this could really start moving. So I bought into this stock at 94 cents on the day that it was breaking out above this longer term Foos revival pattern on this huge spike in volume. So that's also a big indication going forward that this stock could be making a big rally. And our first profit target is about $1.40 per share. There's that $2 level, but that's hard to have the patience to hold the stock all the way up to $2. Uh, so my profit targets are usually in the mid ones on a gold pattern, or any stock breaking out above $1 per share. And also looking back at the resistance, it kind of halted out here in the past around the 140 area. So this was probably a good area where I would want to be locking in some gains. Now moving forward, as you can see here, this was the day of the breakout. So buying in here on this breakout day at 93 cents, you probably want to have a stop loss on a move below, either the breakout point of this candle or even maybe on a move below the low of the candle. Usually when a stock moves below the low of the previous day's candle, that's a potential sign of a reversal. But that didn't happen. This stock actually just kept going. And then it had this huge day going from below 1 up to 135 during the session. So that's a move of more than 40% in a single session. So as I said, you want to take advantage of the multi-day huge runs. I always try to take advantage of big single session gains. And as I said, the profit target was about 140 area. Not exactly. When you have a resistance level, it's usually in a range around that resistance level is where your profit target area is. So this rose up to about 134 during that session and then started selling off. I took advantage of this huge day, locked in my profit at 128 for a 36% gain in just 2 days. So 2 day trade, and you made 36% off of a Foos pattern. And this was a revival longer term as well as a Foos gold. All right, now here we got, this is a bit, I say revival here, but it's also in a sense a survival pattern because the stock has this big run up here, followed by some profit taking, and then forming the three-phase triangle formation here. But with the survival pattern, it's usually where the breakout point is right about here. You want to see price hold up above that. So this stock quickly after this broke down, and then broke down even below 2 again here. So this was a pretty shaky stock right here. So this is actually kind of a mini revival pattern, but also in a sense a survival. But looking here, the actual breakout buy point is if the stock can break out above this neckline. Here, your first profit target is going to be about $3 per share. But since this is so close from the buy to the next whole number resistance, it's probably a pretty good chance that this stock is going to break out above here if we get some momentum going for it. And also we see this big spike in volume here on this big candle day. So this stock is looking pretty strong, and a breakout above this neckline resistance could easily push this up to 3, and then if we break $3 above this resistance level, could easily see a move much higher, possibly $4 to $5. So I went long in this stock at 270. Being that we're below the breakout point and it actually never even broken out yet, you could even maybe ride this ascending trend line or ride the 13 EMA. As this stock hasn't even broken out yet, so you still might want to give it a chance to actually break out, just in case it consolidates in this little range here for a short time before breaking out. But moving forward, we can see that it didn't break out the day after we bought it. It had a short-term dip down and then kind of rose back up, but then on the second day following the breakout, we got a strong push in price and volume where it kind of halted out at about $3 per share. That past peak resistance. So this could have been a decent little short-term gain, but had a little bit more speculative nature about this stock, thinking it could push higher. From here, you'd want to put your stop on a move below this neckline support now about 275, or if you want to be more aggressive, you could use the midpoint of the breakout candle support. But once the 13 EMA crosses actually above here, uh, the uh, the actual neckline support, then you can start riding the 13 EMA trend or sell into a spike. And that's exactly what I did here. 2 days, 3 days later, after we bought into this breakout survival slash revival play, we're up 33% on this trade. I locked my profits at 360. Just taking my short-term gain and moving on. But as you can see here, this moved all the way up past 550 if I was a little bit more patient. If you're riding 13 EMA, you could have it would have got broken down up here around the $4 level. So if you have patience, you can always ride the 13 EMA on whatever stock you want, or sell half and then ride the rest on the 13 EMA. I don't always use halves. I don't always ride the 13 EMA. What I do always do is sell into strength. That's what my main goal is, to take advantage of short-term strength, lock in my gains, and that's what we did here on this stock trade for 33%. Additionally, here another good sign that this was potentially reversing was this shooting star candle, as we talked about bearish shooting star candles indicating potential tops, and then a confirmation of the shooting star candle is if price moves below the low of that candle, and that's what it did here. So if you were still holding this stock and then it formed this shooting star candle, maybe you would have wanted to sell at the whole number resistance of $5 per share. But if you're still holding, a breakdown of this shooting star candle right here, what is a good indication of a potential reversal? And that's exactly what happened. To have this huge sell-off following that reversal candle. Up next here is another survival pattern. As you can see here, we got this big rise in price action, followed by some profit taking, but the stock actually kind of survived here and started consolidating. Had this shorter term symmetrical triangle formation breakout on this day, so that was kind of a first indication of a possible move going forward. I actually went long this stock at 238, right about here as it was breaking out. So, setting your stop on this stock, it broke down below. We'll see on this next trade, or on the next move here, it had that short-term spike down below here. I continued to hold this stock through this small push through the actual breakout support level. No stock trade's going to be perfect, and sometimes it's just your gut feeling about what you want to do with a stock. As I was saying in the last DVD, your gut feeling and your senses isn't something I can teach you. It's just something that you learn over time, doing numerous trades. But in addition, you can't just be an idiot and start holding stocks all the time, and even if they break down. Maybe this stock did break down and it did continue to fall. If it would have broke down the 13 EMA, guaranteed I would have been out of this trade right here. But it just slightly broke down below this breakout point and then rallied forward going through. And then I actually sold as this peaked up at about. I was still holding on this day, and then we had this big gap open, and I actually sold right at the opening at 322, locked in my 35% gain, took advantage of this huge gap open in price, sold at the past peak resistance level, which is your profit target, as always with a survival pattern. So we opened up right at the past profit target, and so I took advantage of that morning strength on that gap open and sold at 322 for a 35% gain. Then it actually just fell from there and never bounced off the 13 EMA and broke down and back down below to where we below where we actually bought it from. So you have to take your profits. Sometimes, we've seen in many other trades where I sell it up at, say I sold it at 322, then all of a sudden it runs to 5. Sometimes it doesn't do that. So that's why I take my profits while I still have them. A 35% gain is a huge trade. I'll take it and move on. Next up, this is a beautiful looking force pattern. As you can see here, we got the lead-in bullish trend followed by a three-phase. This is an absolutely perfect three-phase breakout formation with the phase 1, phase 2 consolidation followed by the phase 3 breakout on volume with a strong candle. So buying in here at 389. You'd probably want to put your stop loss level on a move below this neckline support level. Moving forward, as you can see, the price dipped on the first day back down to about the midpoint of the breakout candle, which would be a great buying opportunity as always. And then going forward, This had a couple just slower days. Then we had a really big strong day pushing above 4. And then we had one day where it was kind of a shooting star candle. I didn't really like that. As I said, potential reversal pattern there with a shooting star candle. And we were up, kind of near $5 per share. So I sold at 477 for a 22.62% gain. Locked in my profit. Moved on to the next trade. Next here is another force pattern. This was actually a single day trade just because of the extreme amount of volatility that came out of this stock. As you can see here, the lead-in trend is neutral, followed by just an absolutely beautiful longer-term three-phase breakout formation that broke out. It had an indication of the breakout actually prior to the day I bought in, but I did not buy in on that session. But then as this was breaking out above here, to new highs, I actually went long at 144, even a little higher than which I would be comfortable with. But the pattern here on the longer term scale had such big indications of a potential move forward. And up next, profit target buying in here would be about $2 per share, and that's exactly what this stock did. I took half profits at 186 as we were moving up because it was just such a big move after we bought in. I was like, man, I needed to take at least half this profit here, and maybe this stock can keep moving forward. From there, the stock actually went all the way up to 260, but before it went up to 260, I took advantage around the $2 range at 210 for 46% on my second half. So as I said before, whole numbers, that's as a profit, using a whole number as a profit target, it's not necessarily wait for it to hit exactly $2 per share. I gave the example previously of, it's in a range. So, if your profit target is $2 per share, exactly what I did here, I took half profit at 210, half profit at 186. That's a range above and below 210 is where I took my profit. So that was a perfect example of, using a whole number as a range around a whole number as a profit target, not necessarily, being so perfected that you need to sell it only at $2 per share. All right, now looking here, we have a great looking revival pattern here. I actually bought into this stock first here on this breakout above 50 cents, and then got stopped out around here for it was a very small gain, but actually bought back into this second revival pattern as a 65 cents breakout was another revival pattern. So we actually got that first spike in price and volume right here on this move, followed by the breakout on the phase 3 with the actual big increase in volume on the breakout. So I went long at 69 cents here on this revival pattern, with a short-term profit target of 90 cents to about $1. But take a look at this. So now looking at this revival pattern, look where resistance is back here, up here at $1. But looking at the long-term scale, this is a perfect-looking gold pattern where price has been retesting the $1 area for about a year and a half. So a breakout above $1 per share, or it looks like it's about slightly above 1, where this has been peaking out. Then this is a huge indication that this stock could possibly break up to $2 per share, maybe just $1.50. But as with these gold patterns, it's very possible for a stock to break out from $1 to $2 per share. And we got in this stock early at 69 cents as this was a great looking Foos revival pattern. We had lots of volume coming in, so something was definitely up with this stock. So now moving forward, you can see here that we bought in at 69 cents. It kind of came down and retested the midpoint of the breakout candle, so that was a little slight dip buying opportunity before it rallied up again and then formed this short-term pennant formation that actually broke out on volume above $1 per share. This breakout above 1, that triggered the actual the Foos gold pattern. So you can see here when this broke out above the $1 level, that was a pretty big indication that this might be breaking over the gold pattern with a potential profit target, upwards of $2 per share. As with me, I always am pretty impatient, and I love to take my profits. I sold the stock for 110% gain, so I was actually pretty patient here and over doubled my money. on this chart pattern. But as I said before, with gold patterns, it can easily go from $1 to $2 in a very short amount of time. So as you can see here, it kind of consolidated in a little pennant formation here. I shortly retested the midpoint of this candle and rallied, and then made that quick move up to 2. And then as you can see here, it formed this shooting star candle, kind of slash doji candle star, and that kind of signaled the possible top to this rally here when it peaked out right at $2 per share, the next whole number resistance, and then fell back down all the way back down to 83 cents. So as I was saying before, with these gold patterns, you really got to be diligent about taking your profits with them. I've had a huge gain here at 145. I locked in the profit and walked away. But this was a perfect example of a gold pattern. It doesn't get much prettier than that right there, folks. Next up was CWLT. This is a force pattern. So as you can see here, we got this lead-in trend, kind of neutral, and then the formation of the three-phase breakout formation. So as it broke out above this neckline, I locked in, or I hopped in at $1.88. We got this huge spike in volume here. So you could put your stop right here, either about 180, about the midpoint in the breakout candle, or potentially down here lower at the actual breakout point, and then follow the 13 EMA once it follows the breakout. But moving forward, we got this two days later after I bought, we got this huge rally here, pushing up towards the next whole number resistance at $3 is where it peaked out and then started declining back down. So I took my profit, sold at 240, locked in my 28%. Moved on, and then you can see here this is actually a survival pattern. It actually broke out here and had a false breakout of the survival pattern, and you can see that's why you want to be diligent about your stop loss, because it can just continue to fall. Then all of a sudden some news came out, I believe it was, and this just absolutely blew up again, breaking out above the highs of the past peak. So it's still a survival pattern. It was just a little bit more of a sketchy trade. So I never entered on this trade here, but if you had some guts right here, you could have bought in on this survival pattern and made a big amount of money. Next up was CPQQ. This was the stock that I was using for the actual example of the three-phase triangle breakout pattern. So this is almost a near perfect three-phase breakout triangle pattern. I actually did play this stock. So as you can see here, we got phase 1, price plus volume plus the consolidation, then the breakout at $2 per share. As you can see, the $2 per share, the whole number resistance took play here. We halted at 2, and then finally breaking 2 on volume. That was our big indication of a breakout going forward. I actually kind of bought a little late in this pattern, but we were at all-time highs. This is a recent IPO China stock. No resistance ahead, so I bought a full position at 225. Then going forward, either could have set your stop loss either at midpoint or actually at the breakout, and those also would have been potential dip buying opportunities if that's what your plan was. So moving forward here, it kind of had this 2-day consolidation before breaking out forward and formed this kind of pennant formation. It actually broke out to the upside and actually retested the 13 EMA support here, retested 13 EMA support here, and then my profit target was about $4 per share. I locked in my gain after this day when it had this big spike above 4 and failed to hold that spike. So I sold at 375 for a 67% gain. And then it broke down the 13 EMA here, but actually rallied a little bit, and then finally broke down the 13 EMA here before reversing the trend. So that's a perfect example of a Fus Force pattern in a perfect ascending three-phase triangle breakout formation. Up next here was ABAT, Advanced Battery. So as you can see here, this is back in 2007 when we traded this. We got this force pattern here with this ascending triangle. We actually got a false breakout above this triangle pattern here. So if you would, I never buy in on this one, but if you would have bought in on this, I likely would have got it stopped out as soon as it started breaking down below the breakout support level here. But then it found support kind of down by the 13 EMA as well as this ascending trend line, and actually broke out again on increased volume. So I gave this another go at 327 to see if this could break out, because we got this beautiful looking force pattern and actually closed at highs above this past peak. So this is looking pretty solid going forward. And that's exactly what happened. We just kind of got a steady rise, and then we got a big price push past $4 per share. And I took advantage of this big day, this spike in price, and locked in my gain at 443 for a 35.47% gain. A huge trade. Following the 13 EMA, you could have possibly rode this up to $6 per share. Maybe would have got stopped out here on this candle pull back to the 13 EMA, but I took my short-term gain. I usually don't have the patience to ride a stock through a strong trend along the 13 EMA. Going through here, here's a little penny stock with a revival pattern. As you can see here, past peak resistance was about 28% per share, but we got this nice, perfect looking three-phase triangle breakout formation with the phase 1, phase 2, and then the breakout on phase 3. I went long at 19 cents. You could put your stop on a move below 18 cents or so, or maybe slightly below that, below the neckline support. Moving forward, you can see it actually retested right there. As you can, just another perfect example of price retesting the midpoint as well as the breakout support before making any continuation. But moving forward from there, this just blew up. I wanted to take profits at or around 28 cents. I sold at 24.5 cents. Just wanted to lock in my profit. Took advantage of this big spike in price action. Sold it for a 28.95% gain. From there, it did peak out at 28 cents resistance from this past spike or peak over here, and then broke down the 13 EMA and even dropped back down below from where we even bought it at. So you must take your profits while you have them, otherwise, stocks do and can fall. Here's another revival pattern. This is back from 2006. One of the trades that we made, just showing that these patterns, it's not just now that these work. I've been trading this strategy since I started trading in 2005. So this was another perfect revival pattern. The lead-in trend here is bearish, followed by this nice-looking three-phase triangle breakout formation, and then we got that whole number resistance, in play right here at 7. So once 7 breaks out above this neckline, I went long at 7.16. Your next profit target is going to be about $8 to $9 per share, where these whole number resistance ranges. So moving forward, the stock pushed from 7 all the way up to about $8 per share, kind of consolidated in the mid 850 levels, and then actually just continued and broke down back here. But I just took advantage, as always, of the short-term push that you get in price. I made 14.3% in just a couple of days. So another example of a great trade on a FUS revival pattern. Here's CHLN. This is kind of a combination of a revival as well as a force pattern. The reason why I was hyped up about this stock at the time was they had an extremely attractive future fair value. Chinese stocks were pretty hot at the time. This was a Chinese housing stock, actually. So my goal was for this stock to break out $5 per share. So I actually went long at 468 after it broke out above this revival, somewhat of a revival pattern here. It's kind of a little sketch play, but it broke out above this descending trend line here, and I bought on this dip actually about 468 with anticipating that we would break out above 5. So moving forward, as you can see here, this was a force pattern with a lead-in trend kind of neutral, and then a neckline about at or around $5 per share. Got the ascending trend here, and actually did break out about 5, and I sold at $6. The next whole number resistance I actually got out right at 6 for a 28.21% gain. This actually came back down, kind of retested in a range around the 13 EMA, so it did actually break it down, and then actually rose all the way up to $8 per share. So if you have patience, or if you want to buy on these dips, the first dip to the 13 EMA, is always the best dip buying opportunity. As you can see here, it dipped the 13 EMA for the first time, and then rallied all the way up to $8 per share from around 575, where it dipped at the 13 EMA. But typically I just buy it on the breakout, and I try to take advantage of strength and sell my short-term gains. All right, so looking here, we got another revival pattern in play. On this breakout above this neckline resistance, we got big volume coming in, But also looking back, we got this past price peak here. So this is a probable spot to possibly take profits. Then the next whole number is up here at 2. So probably in a range around from here at this peak up to 2. Is 2 is a longer term, short term profit target, and the even shorter term profit target is here right about 160. So moving forward, you can see here I sold this stock right about at that past price peak at 165. We just got bought in on this breakout, and we just got one huge day that moved up to this past resistance point. So I sold at 165 for a 32% gain. Same thing. You'd want to set your stop on a move below this neckline support here, or if you were following the 13 EMA, you would have got stopped out down on this level because it just came right back down. So this was a perfect profit target to at least take half or full profits. I ended up taking full profits on it. Next up, this is just a beautiful looking force pattern. As you can see here, we got this huge phase 1 run up with a nice phase 2 consolidation. I actually went long on this stock at 234 on this day when it was looking like it was breaking out, and then it kind of formed this upper shadow candle. So it was kind of nerve-wracking holding through this. But the next day we got a big gap open, and this spiked up above the actual breakout point and got a really strong close at the high of the day on increased volumes. That's a pretty big indication of a strong move potentially going forward. Same thing, you'd want to put your stop here on a move below this neckline support, or you could do the more aggressive point at the midpoint of the breakout. Those are also additionally places where you'd want to buy in the dip if you're looking to do so. So looking forward here, as you can see here, the stock came down and actually retested right about at the midpoint of the breakout candle, then finally bounced from there all the way up to about 375. I took my profits right around the $3 whole number resistance range at 313, got out for a 33.76% gain. Next up, we got PQ, Petrocrest. This is obviously a FUS revival pattern. As you can see here, we got the lead-in trend that's bearish. We also got this descending trend line that you can draw that actually broke out here as well, in addition to this three-phase breakout formation that was formed within the revival pattern. So we went long at 360. Buying at 360, $4 is the next whole number, but that's not that big of a gain. We're looking for about 20% gains or so. So the next resistance zone is the next whole number up around 5. And as well, you can see that price had been stalling out in a range around 5 as well in the past. So that would be a good target range to take some profits between about 450 to 550. So looking forward, as you can see here, I actually sold at 425 for 18%. As it peaked up on this day, we got that big gap up and a nice solid run. So I took my profits. I was up, had a pretty good, decent sized gain there. I locked in my profit and moved on. You could have rode this out along the 13 EMA just about all the way up to 5. You would have got stopped out on this day here. But, that's why I'm always taking profits. I just take what I can get and I move on to the next trade. Here's another revival pattern here with another past peak resistance here for a profit target up at 80. So you can see the neckline was broken above 0.65, and there you can see this short-term phase, three-phase triangle breakout pattern here with the first push on volume with the consolidation, followed by the breakout with volume confirmation. And you'd want to put a stop probably on a move below 65 cents or 64 cents, right around in this region. You wouldn't want the stock to start declining back down below this neckline with a profit target of about 80 cents. So you can see here, that's exactly where I sold. I sold at 80 cents for a 25% gain. The stock blew up for about 75 cents, came back down, actually retested the 13 EMA as it was right about the breakout point as well, so that could have been a solid dip buy right there. And then it had this really bearish looking shooting star candle. So I was actually holding this stock as it went all the way up and then came back down, and I sold into the close right here as this broke down or formed this shooting star candle that was indicating a possible reversal. And as you can see here, that's exactly what happened right afterwards.